Hi guys, this is it's Paul here from Williams on the latest webinar, Brexit, and discussing investments around Brexit and what is Brexit-proof. Have we got a Brexit-proof investment? Just waiting for a few more people to join. There's a few waiting to join us, so if you just bear with me, we'll start the webinar shortly. Right, I believe everyone is in attendance. Welcome to this latest webinar from Williams, and today it's going to be our job to discuss or help you with your financial freedom, kickstarting your financial freedom in a time when, let's be fair, that with Brexit and all the uncertainty we have, things are very, very difficult to decide whether to move forward or wait or whatever. But as I say, we had a lot of questions asked by a lot of our clients, and it's the same thing. It's been Brexit for the last year or so, and should we wait? Should we invest? What happened, etc., etc. So here we've done a little study, and we've come up with what we feel to be pretty much a Brexit-proof plan for you guys. So I'll begin now. So Brexit news, the latest Brexit news. What is Brexit-proof? In fact, what is Brexit going to deliver? And to be honest, there's so much confusion around this and the shambles being made of it that people are beginning to switch off. I mean, all that aside, there's still some very serious concerns out there, and people are rightly worried, and as such are not sure what they should invest in for their future right now. And they're always asking the same questions. Do I wait? Do I move forward? And what do I do? So here it's our task to help you navigate these difficult times. So we'll now present you with an argument why property in the markets we operate in offer both value and security in a market that at the moment is riven with doubt. So how do I choose the right property investment and the time of investing? Well, the simple answer is that no one actually knows. So what you really got to decide in this situation is, what am I being offered? Is it what I've been looking for? If it is, I think then the answer is, why wait? It's simple as that. I mean, if you've got a set of criteria and you've looked at it and you're happy with it, there is no reason to wait. If it ticks the boxes you want it to tick, you shouldn't wait. And in this study, we've selected a property in Liverpool that we consider to be Brexit-proof and offers returns that to date we've never been able to match. Going forward in the various slides, we'll go through what return does this property offer? Is the price right? Is the timing right? Further on, what guarantees do I have that this property will continue to offer great returns? What alternatives are there out there that offer returns that may match? And finally, what does the future have to offer? Well, in short, what does a property or what return does the property offer? Well, I think in short, you should set a figure and in your head and use that figure as a yardstick to measure the investment by. By that I mean set a realistic figure for your returns, and if the product you're investing in attains that, then that is enough. I mean, obviously there are other considerations, like how secure is the investment, etc. But for the purpose of this, let's just say that we're only picking investments that offer solid returns and are very secure. In this case, a particular property in Liverpool. This allows us to explore what options are best, whilst at the same time comparing like for like in terms of risk. So in this case, I mean, generally across the board, we're suggesting that returns north of 5% net, which I think are pretty respectable, in a market where the interest rate sits at 0.75%, very good. In the case of the property we're talking about, we're witnessing returns of 10% net. And not only is this a return that is a return of this magnitude market beating, it's also very secure. This particular property is already built and is currently operating under a model delivering these returns. I mean, the question you may ask, you can see on the thing below, the slide below there, the block Liverpool. This is the property we're talking about. This is an example of it sitting on booking.com. It's there for everyone to see. So, I mean, this is a particularly high demand evening, but we've noticed prices ranging from sort of like £350 to £400 a night on events, up to, or down to sort of £85, £90 a night for just normal evenings during a Liverpool week. So it's sitting there on plain sight for everyone to look at. The risk is minimal, as you can see. It's already built. And generally, I think that the thing is sound. Is the price right? The next question everyone asks. I think in this case, the location of the property is ideal. And we all know that its location is everything and will be the driver of value. This particular property is located on the waterfront in central Liverpool, adjacent to the M&S Arena and the Liverpool Exhibition Centre. It presently operates as service apartments, and it's offering clients the ability to stay in central Liverpool in the comfort of a large two-bed apartment in a home-from-home environment. This particular model has proved very popular, has led to a demand that's seen 80% occupancy rates in this particular property. And as I said, returns north of 10% net for the last few years. The price itself will believe that a property located in an area offering all that they do, with the views that they have and the flexibility they offer, then the answer is yes, the price is right. With the average price of a two-bed in this building set at £205,000, in our view, the price is perfect. Prices start from £175,000. They're all two-bed apartments, but in varying sizes. But the average price, I say, is around £205,000. Is the timing right? I mean, I mentioned in I mentioned earlier, if the figures you're looking at to attain are matched, then the timing is clearly right. I mean, why wait? Your numbers aren't going to change too much. What if I can buy cheaper if I wait? Well, the answer to this is the property is unique. Location, returns, and delivery. The location is second to none. The returns speak for themselves, and the delivery is perfect as a hands-off investment with every aspect of the rental catered for by the existing team that we have on hand operating this project as it stands. So in terms of timing, the opportunity to buy this property is now, and all you will achieve, I think, by waiting is missing out on this opportunity. I think that's the simple answer to that question when it comes to timing. So next up, guarantees and alternatives. The first bit, what guarantees do I have that this property will continue to offer great returns? Well, like everything in life, there are no guarantees, except perhaps death and taxes. In this case, all we can offer is the reassurance that the location of this property and what it offers clients that use it will not change. To that end, we believe this will continue to deliver market-beating returns for many years to come, even when interest rates do start to move higher. I mean, where can you achieve returns of 10% plus with a risk profile this low? I mean, I argue that there is nothing that beats this, which I think we can prove by looking at the alternatives out there. What alternatives are there out there that match the block? Well, to get straight to the point, I don't believe there is anything that comes close. In my opinion, perhaps, I mean, the property market, I think the only product that hits big numbers like this are the likes of HMOs. I don't know if many of you guys are aware of HMOs, houses of multiple occupancy. These may or may not, I mean, I don't know if anyone knows them, but if you're not, they're not for the faint-hearted, HMOs. They're notoriously tricky, and they tend to operate in a market sector that may, I think many of you probably would want to operate in. Outside of this, as mentioned there's the PBSA investments that get close. But again, these cannot match it. They come with disadvantages that this property does not have. That's a distinct thing. In other areas, I mean, double-digit returns. I mean, yes, stock markets, bonds, perhaps you have a look at. But again, even in these and other double-digit returns are difficult to achieve at present. And in our view, I think we'll struggle to get close for many years to come. And that's I believe, how we feel that this product delivers in spades. It's not beaten by anything else. I mean, what does the future have to offer us? As I said already, with this development, as already discussed, it will continue to operate as it does presently. We do not envisage any divergence from the present model that offers the returns mentioned. There is obviously some flexibility, which you have with this property, which is unique. Flexibility, you can live in it as an owner-occupier if you wish. There's no precondition that it has to be a serviced apartment like an Airbnb type property. You can actually use this. You can block out periods when you want to use it yourself. So again, very flexible, very convenient for you. If you want to visit Liverpool yourself, if you want to do an event yourself and you want to lose out on the income, you just block it out and you take it for yourself. It's as simple as that. Apart from living, you can also offer the property out as a standard AST, assured short-term tenancy. But I think it's our belief, and I think the belief of most of our clients and buyers, that they will continue to enjoy benefits that property presently offers owners, and they will probably stick with the model we have and won't have any interest in changing what this present project offers to its investors, which, as I said, is groundbreaking 10% net returns minimum. Now listen, we got a questions and answers. If anyone has any questions to ask, please feel free to put them to me. I'll hopefully answer them quite succinctly and briefly. Got anyone coming up at the moment? Any questions? Just a quick look. I've got one question here coming in. The 10%, what proof have you got, and how do you attain it? Well, as I've said, this is an existing project, serviced apartments. It's been operating for several years now, for many years. It's proved a successful model. We've seen the figures. What we've done is the company that owned it before owned it in its entirety. So as a block, we drew the figures they had together for the last few years, did the numbers, took out all the costs, which included sort of reception, security, linen, cleaning, sort of changeover, etc., advertising, marketing, adjusting costs. So you basically have to just sit there, do nothing, and take the returns. And we averaged out, and when I say averaged out, we averaged out a bit higher than 10%, but we basically drew the numbers back to 10% net because we were comfortable making making assurances out there, sort of saying that we were comfortable hit 10% net. That's a comfortable, very, very conservative figure. In our opinion, we think you're going to get more, but we've decided that I'd rather hit a 10% number net and prove it and actually open up to you guys being pleasantly surprised when it does return bigger numbers. We've seen numbers as up to 20% in certain cases. So that's quite an interesting element. Another question coming in, is it mortgageable? Yes, we've done our tests on it. It's fully mortgageable. We've got I think there's a list of lenders that we've approached that are happy to lend against it. Its track record speaks volumes, and we won't have any issues going forward. So yeah, that hopefully answers that question. Have got anything else coming in? I've had a question come in via email to me. Someone's asked me a question. I've heard this before. How do you allocate an apartment per person when you're renting them out? How do you do this? Well, you know, how is it done fairly, sort of thing? And a good question. We've worked it out. The best way to do this is on a there's 46 apartments, as you know, within this particular block, or you don't know, maybe you're listening for the first time and I've not heard about the block, but there's 46 apartments in total. Of these 46 apartments, we decided to break them up into 4 types. So they're all 2 beds. They all offer the same sort of views. People aren't particular when they're booking them up. They don't pick apartments, they just pick a type. So they'll pick, for example, let's say 2 doubles or 2 twins, maybe a double and a twin. So let's say there's 3 types in total. We'll then divide up all the apartments equally. So there'll be 3 types. So your apartment will fall in. You have a choice. You can choose initially what you want, whether it be 2 twins, a double and a twin, 2 doubles, or we'll allocate depending on how you feel about it. But yeah, we'll set that up. And obviously, when everyone who comes in, if they're looking for 2 twins, let's say yours is the first one on the list. They'll book yours for a period of maybe 1, 2, 3, maybe 2 weeks or a day, whatever. It doesn't really matter. But once yours is picked, yours drops to the bottom of the queue, on the bottom of the list of those type or that type of apartment, and then comes back to the surface once the others have all been booked out. And we've worked out that over a period of time, this is a fair system. It averages out very well. The numbers are pretty even, and any major event, you're going to get fully booked anyway, so everyone gets the benefit of that, so no one's going to miss out on that. And then on a week by week, a normal basis, on a daily basis, we worked out these figures come in fairly. And I think that's probably the best way to do this, and we decided the best way to do it. All the costs are very upfront. You'll see a breakdown of everything, just getting the granular figures coming out of what every apartment's going to be paying per apartment. And every time using our Skylet model, which this one will be operating under, which I'm sure everyone is aware of. If you're not, then just go on our website and have a look at our Skylet model. You'll be able to access and view every time what your apartment's doing, how it's let out, what lettings it has, the rental returns you have, etc., etc. So very, very, very clear and open, and one you can sort of interact with quite happily. At the moment, I'm not sure we've got any other questions coming in, so hopefully that is that. Hopefully that this particular project, as I've said, offers what we consider to be a Brexit-proof announcement or Brexit-proof investment opportunity. It does what it says on the tin. It's already doing it. The returns are there and set in stone. We've got bookings existing at the moment on these particular properties. They're existing, they're happening, and I think 10% return net is a set of figures which I don't think we can beat, and I don't think you'll be able to beat them with a product of this quality out there. So at this point, I'd like to sign off, say thank you for listening, and any more questions, just either email myself, Paul Tillett, or paul.tillett@flambarwilliams.co.uk. Come into the website, or you can download this webinar and listen to it at your leisure, or phone in and have a conversation with either myself or one of the brokers. And again, thank you very much for listening.